Hi there. Let's take a quick look at the main financial objectives of a business. Financial objectives in the sense that these relate to one of the four main functional areas: finance, operations, marketing and people. Well, for finance, we look at the specific goals or targets that relate to the financial performance of a business, sales, profit and so forth, the resources available to it, and also the structure, the financial structure of the business. Financial objectives are particularly important for a business because they very much help inform the decision making and therefore very influential on the other aspects, the other functional areas such as marketing and operations. So on the screen there, I've just listed down 6 key values of setting financial objectives. So we'll pick out a few of those as we go through, but it might be worth pausing the video and just jotting down or adding those to your notes. The top one is really important. It is the case that in many businesses, the financial objectives are the main focus. What profit do we want to achieve? What revenues do we want to achieve? And they are often the most important measure of success or failure. Similarly, key financial objectives, particularly in relation to things like liquidity, can help business monitor the risks of the business failing. And also they are the means by which shareholders gain insights into how the business is performing and therefore the strength or the success or otherwise of their investment. Lastly, I'll just pick out the last one. We're going to come back to this in a few minutes' time. Financial objectives are really important when it comes to deciding whether to make investment decisions. So there's a very clear link between investment appraisal techniques such as payback period, ARR and NPV, and financial objectives. So let's just quickly go through 6 key financial objectives. We're starting with the first 3 there on the screen in relation to revenues, costs, and of course the difference between revenues and costs, which is profit. So revenue objectives, well, often businesses will look to achieve a certain percentage growth in the value or the volume of their sales. So sales growth. Sales maximization, to maximize the sales of the business, might be an objective. Similarly, the business may wish to maximize its market share, so to maximize the revenue it gains as a proportion of the overall market revenues. In terms of cost, really important again to set objectives in terms of unit costs, to maximize the efficiency of the business, to perhaps achieve economies of scale, which therefore enable you to reduce unit costs as output rises. But of course, many other businesses are also about cost to minimization, particularly in difficult times, to try to minimize not just the unit cost, but the overall costs, including overheads. And a consequence of revenue and cost objectives is that the business may be more or less able to achieve objectives that target either a specific level of profit, for example, £1 million worth of operating profit, or rates of profitability. So profit margins, gross profit margin, operating profit margin, which of course, as we know, express profit as a percentage of revenues. And for many businesses, profit maximization is a key long-term objective, particularly to maximize the value of shares in the business. Let's just pick out 3 other key financial objectives. Those in relation to cash flow. We've done a separate cash flow objectives video, but particularly in difficult times, businesses will want to maximize their cash balances to ensure that they continue to operate, to survive, perhaps by reducing the amount of cash that is tied up in working capital, so for example in inventories. When you look at a concept called gearing, you consider the capital structure of the business. Gearing, which is the percentage of the overall finance of the business that is represented by debt, is a key measure of capital structure, also known as the debt equity ratio. So you may set an objective to not allow gearing to go above a particular percentage, for example. That would be an interesting financial objective. And lastly, but definitely not least, we mentioned investment appraisal. So a key financial objective is going to be targets for the level of investment, the overall amount. For example, how much we spend on capital projects, but also the return that we earn on our investment. So the classic one there at the bottom, the return on capital employed, ROCE, is a classic measure, a classic objective for measuring the return on the investments we make in a business. There we go. Hopefully that's useful. That's just a summary, a quick overview there of the main types of financial objective.